in the past, when you bought Bitcoin and cryptos, you're kind of doing something away from and kind of countering the authorities, U.S. government thing. Now, one of the biggest beneficiaries if you're buying cryptos and cryptocurrencies and Bitcoin is not only the Trump family, Trump administration officials, but you're also dependent on the Trump administration for these things to continue to appreciate. And a lot of them are just, tokens that track nothing. And to me, that's the risk now is the big insiders are getting out. 100,000 is a very key support. Now we reached that level. That's great. It's supposed to bounce from that level. But what it does from here is very significant. If the market continues to tickle down below 100,000, those are dominoes potentially falling because it's very highly correlated to the stock market. Now it's almost the same trade because a lot of that money has been coming from ETFs. That pile-on is coming from people who traditionally have been more involved in the NASDAQ and the S&P 500.
Right. It's a risky asset that trades in tandem with equities rather than treasuries, even though a lot of people talk about it as this safe haven. So what's interesting, of course, is that on October 10th, there was this crypto liquidation event. A lot of people in the industry talk about that as a turning point. What happened on October 10th, Mike, from where you sit, that kind of helps us understand the struggles that Bitcoin and the rest of the altcoins are going through right now?
The bond gods started to kick in to remind crypto persons about the lessons of tempting the market gods. So not so much the bond gods, the market gods. So on that day, the S&P 500 dropped 3%. Not a big deal. Stuff that used to happen. Then the crypto market plunged that weekend. And since then, Bitcoin has dropped down to almost 10% in the year. It was up around 20% in the year. The Bloomberg Galaxy Crypto Index was up 30% for a while. Now it's down 7% in the year. So I think what's happening is all that speculative hubris and excessive bullishness is just now ticking down. And it's towards the end of the year. This is not really a time to buy dips when S&P 500 volatility is running at very complacent levels, the most complacent in 5 years. So I think what's happening is we're finally hitting those sell stops and the exuberant buyers of cryptocurrencies. And my fear is it's going to be more of them to the end of the year. The bottom line for crypto people, I think they're understanding now is they're not buying treasuries. They're not buying something uncorrelated. They absolutely need the stock market to go up just for buoyancy. And what I see is divergent weakness in cryptos. Like I mentioned, S&P 500 is up almost 17% in the year. Bloomberg Galaxy Crypto Index is down almost 10% in the year, despite trading 4 to 5 times the volatility. That's a real bad sign for cryptos. And if we start having just a little more weakness below 100,000 Bitcoin by the end of the year, I think we can test some potential deflationary dominoes. I'm quite frightened.
I'm looking at CRYP Go on the Bloomberg, and it allows you to look at all the cryptocurrencies. Of course, there's the OG Bitcoin, and then you've got everything else all the way down to the smallest ones like Polygon, which I've never heard of, but I think that's par for the course here for a lot of these coins. Does it follow that every time Bitcoin does something, the rest of the digital coin sector follows suit? I mean, are people making the distinction between how Bitcoin trades and how Ethereum trades or Tether? Do you look into that?
Absolutely, Scott. I'm glad you went there because they're all correlated. Bitcoin's beta in the space. So if Bitcoin drops 10%, all these other cryptocurrencies typically drop 20 to 30%. One good example is Dogecoin. It has $25 billion market cap, and it's number 9. It was launched as a joke. It is a joke. It tracks nothing. This is the kind of stuff that, to me, reminds me of kind of things I read about in 1929, and I remember in 1999 and 2007 in the U.S. It's just silliness of an excessive bull market. So the key thing to remember is crypto people tell you Bitcoin's different. I can point out, yeah, sure it is. In 2009, there was one crypto, it was Bitcoin. Now there's about 25 million listed on CoinMarketCap.com. So there's unlimited supply of these things. And I, as a strategist, I look at this as, the best days are over. I'm more worried about going down than any more continued rally. And one thing that really happened is when Mr. Trump flipped, that clicked in a little bit of speculative excesses. And now we have this pile on ETFs. It's classic peak bull market kind of trading.
Wow. Does technical analysis apply to crypto, Mike?
Absolutely. It has to, Paul, because most of them track nothing. There's no basis. Like if I trade crude oil, gold futures, or look at gold futures, it tracks a gold contract. If I could trade a T-bond futures, it tracks a treasury bond. And cryptos, only 300 billion track anything. Those are stable coins, crypto dollars. So I'm worried about this whole space. People are going to realize, it tracks nothing. We'll just flush out 90% of it, and then we'll get back to building a decent market that's going to go up. And that's what I'm worried about. If we break below 100,000 in Bitcoin, the whole space is going to just cascade is what I'm worried about. And it's getting towards the end of the year. We had a few profits. They're gone now. What do you want to do with the rest of them?
So what happens in a true crypto liquidation event sell-off? Do people in the industry, in the market, look for someone to come out and give a vote of confidence? And who would that person even be at this point?
Exactly. So that's the key thing. It was the biggest thing ever to have Mr. Trump flip. It helped him get elected. And now we all know there's a vested interest and they need to support the market. And here, Scarlett, it's just a bunch of bots trading and they're all, they trade it in and out. It's a great casino, but the house usually wins. And I think we're finding out the crypto gods are teaching us, the market gods are teaching us the house is winning. I'm actually very concerned. So one key thing that's really happened this year, the chart on Bitcoin looks almost exactly the opposite of what the gold chart looked like a few months ago. It was hanging out, and it broke out higher. Now that crypto chart's breaking down. It's on like a monthly candle chart, so I'm really worried about it now. And also kind of leading indicators. MicroStrategy. Now strategy was a leading indicator of Bitcoin. It's below its 200-day moving average, and it rolled over in August.